Have you ever danced with the devil in the pale moonlight? Wait, no. I mean, well, hello, folks. It's Top Gun here with you, and I got a good one for you today. Sorry, one of my fans actually commented and noticed the cage and rhythm of my voice can imitate Jack Nicholson from Batman, as the Joker. So, yeah, having a little fun with that. And also, I was asked to bring the levity back. Trying to have a little more fun with what's going on. World's on fire, let's party! Not usually the scenario I want to go with, as, these just seem like serious times, but alright, I'm gonna have my best ability to try and have fun with this. And so, yeah, the title of this, who could have seen it coming? I told you so. I never lie to you guys. I tell you what I see and what the tea leaves tell me. And, I've tried being modest. I've tried being humble and just presenting the facts. And some people catch and seem to like it. But, yeah, sorry about the background noise. I'm going to see how bad it is. Watch this video before I release it. But, yeah, I'm going to take pages out of RH's book here and use some ego and just lay down the alpha, I guess, as, the cool kids are calling it. Wow, it's like I decided to do my video and it just got extra loud. I hope this is not coming through, but I have a hunch it is. Alright. So, yeah. What am I talking about? Oh, Apple. Oh my god, Apple has taken such a huge dive today. Okay, yes, my crypto fans, get it out. Ha 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 ha. 2.5%. Ha ha ha. Yeah, I know. It's not a big deal in crypto. But in the stock market, this is a hinge pin. This is important. This mattered. And I'll explain why. And then, unfortunately, it matters to us in crypto. Yeah. Life kind of sucks like that. Let's have a look. So, no one could have known that Apple was just gonna suddenly dip down today and close the bear trap. Like, no one could have seen oil going up, which indicates inflation will go higher. Why? And the dollar. No one could have possibly seen that. Oh yeah, okay. So I'm right about my Apple call, which is earlier on Twitter. Pre-market, the dollar's up and Apple's down just a little bit, and oil's up, inflation's intact. Yeah, if you've been watching my show, you know what this means. Da, da, da. So, yeah, this is me bragging from my tweet 7 hours ago at the beginning of the day. Oh, before the markets opened and did this. So, to explain, basically, as we had a bull trend, I didn't even bother marking it too high. As we had that bull trend, I had it marked there, and I didn't give it any color significance, because to me, it's a thin, small, faint line of support, with a small chance of the asset bouncing and continuing to go higher as this rally overextended. So, basically, institution money started coming in and rescuing. And institution money kept buying up, not a whole lot of retail investor, a little bit, as this bull trap builds and starts scooping in more retail. And more retail, of course, at the top, chasing the mania. And I called my short, what's this yellow line here? As it constantly bounced up? That yellow line, as I said in my other videos, is where I called my short with expectations that Apple could pop as high as $180 before dropping. And let me get rid of that line there. Now you can see the dollar value, 176. And then she started to correct down through the week, and today, dropping on down. So once it blew right through this line of support, it was no longer a line of support. It was soft support anyway. This is actually the bull trend that I'm marking, and probably other investors, and more support. And this is still thin, flimsy 1 point thick, small chance of bouncing off support. So the thick support, the lines that really matter, are the historical ones right now, because the trend is a macro trend, not a micro trend. Okay? Larger picture. So looking at the micro, we're coming down to 166, which is a firm line of support because it was a firm line of resistance to get over. Has been in the past, has been in the past, has been support in the past, has been support in the past. So this is significant. It may find some respite here tomorrow, maybe even a little bounce back. But if and when it loses this support, she'll be coming down to test 157. When this happens, if it happens soon enough that it's before this, I think we'll see a bounce up and a retest as it'll come back up to try again to fade out 166. We'll see. But if it punches right through this bear long, because it takes too long to collapse off this line, I have more of a hunch that we'll double shoulder right down into a reversal. We'll have to see just how quickly this falls. Now, the reason I say quickly falling is I talk about leveraging, all right? We do leverage trading. Basically, I talk about inflation always being a monetary phenomenon. And it is, but money isn't just fiat, isn't just the 3 trillion of circulating dollars. There's $50 trillion of debt, which means credit, which means credit cards and other things, and leveraged trades that create out of nowhere more money into the system, because credit is the same as fiat. It's accepted the same because there's a belief it has the same value, until suddenly bubbles pop. Now in 2008, you had a very nasty bubble because of crooked and hindsight horrible actions through the banking system. And one person went to jail. Watch The Big Short. You'll understand, okay? But the other thing is, it didn't fully deleverage. The bubble of leverage and credit on that never fully deflated. Instead, the Fed started printing money instead of credit to buy up MBS and CDOs, tranche opportunities as they were renamed. As it buys these up with money, it takes the pressure off the debt system, but this over the last 10 years propping up assets that were already too high from a bubble has just inflamed the bubble even larger. Now the Fed will probably continue actions like this, but unfortunately it has gone so hard so fast, and other little things being done politically affect and speed up inflation. It has to deal with inflation before it can do its normal actions. It has to, or it could collapse the economy. So inflation has to come down. They're behind the curve on that, which is doing more damage, which is why I see a lot of damage and pain to come in the future. We'll see how hard they come in September. There are important dates to dealing with an over-leveraged bubble that cannot be maintained without causing super amounts of inflation. There has to be restructuring, removing of debt, some drop in asset prices. I mean, most of the Generation Z praying for a housing market crisis so they can have a chance at owning one, because there isn't right now. So there's a lot of interesting things at play, which means, yes, everything is just a little too high in asset price with inflation going on. Because, I mean, that's exactly where it is the Fed prints money, which ups asset price, which creates inflation. It's just they try to manage this at 2.5% a year. And they've gone severely in excess year over year, month over month. Now, last month they got so excited and traded hardcore on this rally, on this news, because the inflation stayed the same. Their CPI, which doesn't track, food, rent, air, things you need to live. No, it just tracks necessities. Okay, we're going to have to talk to them about some definitions. But the CPI, it does track gasoline. And gas prices started to drop. And that is what allowed it to stay the same. But wait, if that was dropping, why didn't it drop? Other things had to still be going up to keep it the same. So all you saw was some relief at the pump and continued inflation. No actual stop in it. And everyone traded up on that, which means asset prices go up, which means more room for leveraging assets, which means more money in the system, which means more inflation for the Fed to fight. They have to tighten the monetary policy, make it harder to ball or hurl, so less people can mint fiat, if that puts it into crypto terms. So when you've got the entire world at the mercy of the US dollar, the trade dollar, the world reserve currency, everyone's experiencing inflation. You have economic conditions that are called a world recession with no, saving grace that until things are balanced out or money is just printed again. And you've got other situations that I won't go into that negative because, well, we've got the situation over across there where, oh yes, we're getting really, really upset because, yes, my right-hand man, daughter killed. Ukraine did it? Oh, it doesn't matter if they really did. Don't care, but they will pay for it. Oh yes, and we hold all the nuclear power plants. We don't even have to launch a missile. I don't know if that was really as much levity as you guys were hoping for me to drive home the point of how nasty that situation is over there. Hope you enjoy. I'm not trying to mock or make light of anyone who is suffering. This is horrible, tragic situations. So I don't know how to deliver this as positive and hopium as I would like to. So I talk about all this because, alright, if Apple is leading the ETFs, if Apple is leading the rally in the NASDAQ, the rally in the SPX, the rally even in the Dow Jones, wow, these things, funny how they all look similar even with different numbers. Okay, so volatility has been relatively low, but it is starting to spike a little bit, but there are much higher ranges when an actual crash really starts incoming. But everything, the heat map analysis today just went red as things started to correct. Like, I've been tracking some trends as some assets have been sparking like, hey, we're near a bottom, but other ones haven't even touched or faded out. And Apple had quite a high expectation. It just barely wicked out of it, but not really. So the trend continues to actually be bearish on the whole. And if asset prices are going to fall and less is available to leverage and borrowing and lending isn't available and everyone's racked up their credit cards and their savings are exhausted, there's less people to buy crypto. So will crypto prices be affected by this kind of effect in the world? Well, we can put our head in the sand like an ostrich and hope it goes away. But I like being prepared, which also means staking my hex and putting my head in the sand and hoping it goes away. No, I stake some of my hex, and in the long term, it will go away. So in the long term, a 5-5-5-5 stake, 15 years from now, we'll be laughing at the crises we're currently facing. Yes, I locked myself into some of my assets long term. That's kind of how Hex works. Hence, it being in my name, I do believe in the system. I just did get excited with Pulse Chain and all the things that help make Pulse Chain even better, in my opinion. So, I got sidetracked with that. And I do Hex videos, nobody cared. I do Pulse Chain videos, everyone cared. So, I left the Hex content to the Hex people. Not that I don't love the coin. So, anyways, yeah. So, I mean, basically for me, I believe in crypto, so I believe in the DCA average. I don't like to day trade, even though I'll call the odd thing like the death of Luna and this hypothetical short in Apple, because I also said on Twitter, I wish I had the money to do this short. But I mean, a put, really, because the short would mean I trust that any other asset was going to keep its value while I leveraged it in order to short Apple. Leveraging in this market is insane. Alright, so we're going to have another leg down. And this is where, as we come down, We get to figure out how much of the bubble gets kicked out, how much pain is left. As we step down through these values, I anticipate at least needing a double bottom in the market to regain any confidence at this point in a tradable rally. So a double bottom in Apple means some lower things, lower falls in other assets. The dip on the other side of the W continuing down. If Apple continues to lead the trend, the risk on stocks do change around a little bit depending on the news and who's coming out, where the bullish money tries to go, because there's still some left in the system that's not been shaken out. That's the point of inflation. In the meantime, you have crises where chip chip cheerio, mate. Yeah, we're in England here with a Chesterfield and we're about to burn it. That's right, because no, I sound Australian. That's not working. Oh well. Yeah, whatever. Accents out the window. But yeah, in Britain they're going to be burning their Chesterfields in order to stay warm because they won't even be able to afford oil throughout the actual winter. So they're still going to be screaming and trying to get a hold of oil. It's funny how I do always say the trend is your friend till the end. And to be noted, this is the downtrend of oil, which is irking out and irking out, it seems. This is what's saying inflation is still intact because there's still money to chase this necessity. Basically, when there's not enough money left to chase the basic needs that support people living through the winter, the Hunger Games have set in. I didn't design the system, okay? I didn't build it, but unfortunately the Hunger Games kind of apt. Talked about that stuff before. So oil, I believe we're starting to see a rounding effect, a bottoming in oil. So I have a funny feeling that this line will come back to be tested maybe again. After we go up to retest here, we'll have to see how this goes. We could get as low as here, but I have a funny feeling that 75 will be our absolute low in oil before the winter kicks in, and necessity still drives the price higher. And as that happens, the input costs to manufacture goods and deliver them rise. So the cost of doing business increases. So the cost of goods has to increase. This is how inflation continues to fall through in different ways. When certain assets at the base commodities are going outrageous, all the inputs are affected onwards. And oil is a necessity, and it is in very, very short supply because of some very short-sighted thinking of political policy. So a problem the Fed engineered, the beehive. Biden, dopey-do, come on, man, enough of this malarkey, smacks the bee nest, thinking this will be okay. This won't speed up inflation. This will hurt Russia. Okay, I should try and stay away from political stuff, but I mean, I think I said it before, and I'm going to say it again. Inflation. Coke bottle, pressurized, brand new, full of inflation, slowly bubbling out. You don't want to agitate that thing. The Inflation Reduction Act. 2 Mentos in my hand. Ha! I should get some imagery and put that in here, or maybe a producer to help me with these videos. I don't know. I felt like that's lacking. I should put more than just charts in, because that would tell my story. Maybe make it somewhat funny when I come up with this imagery. Of course, I'm sure you're imagining it. So I see these things, and I see long-term issues. So go figure. Oh, kabibbled in Bitcoin. Now, having a look at my Bitcoin chart, I've talked before about the levels that I believe it's coming to. So as we bounce down off of here, this becomes completely irrelevant, because that was soft support and overextended bull trend. Gone. We're not even going to have a problem testing that, because we'll run into these lines and this downward trend line before we ever get back to our bull trend line. That won't be a worry until we've bottomed out and start our climb up. Then we'll look at some of these past angles and incidents to see where there might be some geometric fluency, if it matters. All right, so for now, this is the last ditch bull, this faint red support I have here that I expect to fail soon. And really, the actual support going forward that will matter, I believe, might actually be this one. I have a hunch that Bitcoin might be not as leveraged at this point, so we'll probably see traveling down this way until we get to the 16,000 level. If we break that, then we're back into the other area. But for now, I think that this is our strongest line of support, indicating we won't fall faster than that in Bitcoin as we step down these levels and lose support. But as it continues to lose support, it'll become more clear. I have a funny feeling that these large, giant booms up are points where people might have leveraged a little too much to buy. And if it drops to this price, it burns their leveraging. And that's why we see it dip so suddenly like this through large areas where it just suddenly popped higher and has to reclaim the pop down from the explosion of leverage buying, creating credit and minting money out of nowhere based on asset prices, based on speculation, based on the future being on always more with no problems in sight. The more debt you take, it's always got to be repaid sometime in the future, so that's more problems in the future you have to worry about. And you'd think your asset prices back you up, but when everyone's done the same thing, they all kind of implode together. So the Fed, I don't think, will really want a full-on depression. And I don't think they'll really allow one to try and happen, but I'm not sure. Ooh, I said the D word. Ooh, I hope my YouTube doesn't get canceled. Even Jamie Dimon wouldn't say that word. Maybe I should edit that out. I say that so often, and then I'm like, part of it is the truth, my unfiltered me. If this gets my channel banned, so be it. I'd rather be just calling it how it is. So, yeah, there are some very nasty things. Like, oh no, that's in this short term. What happens when we bottom out to this range? Bitcoin will start climbing possibly again. As long as we get here and pray that the world is soft landing, that the Fed and the government have started working together to balance a certain amount of spending, because it will be required. So the Inflation Reduction Act be more like the Economy Survival Act, keeping it alive while the Fed is crushing all kinds of demand and other things around from the public, allowing government spending but not public spending, doing their thing to try and still bring it in for just a recession and pull it out. There's your opium. I think it's going to be a deeper dive. They've got some problems, and this is where we look again to see what the world, we'll look constantly the whole way to see what the world economic conditions happening. But I mean, China, their collapse is just accelerating faster and faster. They really overdid it. And I know some people asked, that can't be real. All the buildings collapsing, they don't even know how to demolish them. All they've been doing is building them and they've built so many for like a decade that are dangers and hazards. They can't. So in order to demolish a building, what you do is you travel through the levels of the building to place explosive charges in the supporting beams. In order to do this, you use the elevators or stairs. What do you do if they never built any elevators or stairs? I guess you put all the explosive around the base where the only place where you can get. What happens to the building? Oh, it falls over instead of properly being demolished. So do they know how to properly demolish one? Probably. Are they able to? No, they're that badly built. Yeah, they're just eyesores and dangers and hazards of ghost cities that need to be demolished. So that's at least stimulating a little bit of economy because, well, the buying of explosives and some construction crews trying to move some cement around for I don't know what reason, just to stop people from daydreaming about going to the ghost cities, to stop them from collapsing on people's heads in the future. I don't know, but yes, it is what it is, folks. So, looking at Ethereum, where we had finally, to my excitement, a little bit of decorrelation. We finally actually saw that. Why? Oh, merger. So again, looking at my charts over time, we no longer care about that bull run. Right now, that's right. Back into this triangle originally. I never expected it to get over this yellow line right here. I thought this was going to be the top of Ethereum. When it got here, yeah, a little more surprised. Like, this just really caught me off guard. So I expected it to trade this way towards the edge before dropping out. But the merger, buy the news, sell the event. It's not the event yet. So, funny enough, it's very exaggerated over its more modest bull run. I think there's a chance of a bounce off here again as people keep buying the rumor, even in a negative market. We'll see. We'll see if they heed the stock market or if there is some more buy the news, sell the event going on before this correction comes down. But again, in the notes of decorrelation, everything kind of wiped out together. But then it started trading up a little differently, and Hex decided to be modest, to keep energy, and to keep what would be considered a healthy stock market trade. As funny enough, I called this bottom out, go figure, and oh, we got all the way up to more than a 2x from the bottom, 2.9. That's 5.8. That's 7.7. Is that right? Yeah. That's 7.4. So almost a 3x on its best day from the bottom. And then she lost her at. But I said when we hit this bottom, we were going to trade sideways through this condition. Now, the way it kept this more modest, I still have optimism of these yellow lines mattering, being a possible bull out. We'll have to see how bad it gets with the market, but there aren't as many buyers, and there are a lot of rich investors who have already sold out the top and made the best of this situation, who will still have money in a bear market, who along with the Fed help re-stimulate the market when trading conditions get better. Will they still be buying Hex? They may. Because I mean, I hear some of them talk and they're like, what recession? Everything's fine. Like, they will keep buying because they're rich enough to not notice poor people problems. And there are some of those. So can Hex stay above the market crash because there's so few people in it? The adoption's so low, it's so gate kept? Maybe. BNB, strangely, may not have had the same leveraging pain, as it didn't fork down as hard as everything else. And it came like this big golden trend is the big standing trend, and it cracked right out. BNB has really been pushing. I think it'll bring some more pain, but we may not see as sharp a crash. We'll see more healthy trading, more chances to screw up shorts. Don't do it. This, like, when the micro trend isn't as scary, this thing, I don't know. I don't think these are at bottoms. We got a double bottom, I think, through this trend to see if BNB can go further. But these aren't as long concerns. And what does this become? A bottom? This becomes maybe a place to DCA in, even if it goes up and comes to a lower bottom. Oh, well, if that's a bottom, good place to DCA in case it's the last bottom. That's my general buying strategy, which is why I care. I'm not in here trading in and out. I'm calling the tops occasionally. Ego. I gotta, yes, I understand where they're coming. So, but I'm calling bottoms when I see them where I think they'll be, or when I'm like, there, the tea leaves have called this a tradable bottom because, hey, this is where I want to DCA in. Because I am DCAing in over the long term. I'm just not doing it every week. I am trying to maximize a little bit within the weeks or months what I think is the best buy over the years, because I have a very long time horizon. I plan to be investing for the next decade to 15 years. I don't want to touch or sell my investments. Really claim I'm going to work, I'm going to invest until I got retirement saved, because I don't want to work till the day I die. That's my plan. I can't tell you what to do with your money because I'm not a financial advisor. I'm just a loudmouth who tells you to hit like and subscribe and tries to explain some short-term and long-term economic conditions where we've got places that we have to look if we want to prepare and not be taken every single time by false promises, rallies, the chance of guaranteed money. There are no guarantees in life. There are none. But in the what if game, like, what if the internet gets taken out by a solar flare? Oh well, you were already nuked by the neutron radiation and the fact that our ozone layer is missing and most of our atmosphere. If there was that bad a solar flare to take out our internet, you died in an instant. So it's okay. You still died rich. Yeah, like, yeah, bad stuff can happen. Things can go wrong. Not everything is guaranteed, but I have my optimism about hacks. I have my optimism about Pulse Chain coming, which isn't pumped quite, well, it is, but it isn't pumped quite the same way as the merge, and it's willing to wait until the merge just does its disaster thing, proves how bad the Ethereum community screwed up, that no real fixes are come, and then come to the rescue. I love that plan. I would do that plan if it were up to me. Who knows what Richard Hart's gonna do though? So, yeah, I would love to see it come out after the merger and come to the rescue. I think that would be pretty cool. If it's ready, we'll have to wait and see. If we're lucky, I'm going to get Gamma on Crypto on my show next weekend, and we're going to have a good talk about pulse chain programming from the layman perspective. Don't roll your eyes at me. I'm going to do my best to make it English. And so is he, and he's a better programmer than me, and he calls himself a novice. Alright, I'm a script kiddie. Going to try and speak English for you, so you can enjoy it. Alright? So yeah, other than that, nothing major to really report. I just wanted to get out there and be like, yeah, here, the bull trap closed. I called it this morning, and I'm gloating about it. I don't think it's tasteful, but I'm hoping it maybe gets me some hate or some more attention here, because, well, I actually don't know what I need with the attention. I mean, I keep getting encouraged by the community. You guys love it. Keep doing the content. So, all right. But, I mean, it's only fun doing the content if people are enjoying it and watching it. So, you'll hit like if you want to. You'll hit subscribe if you want to. My numbers have been going up recently, so I guess, hey, thanks for the attention again. Do my best to put out a couple more videos, but I'm still working a lot of construction. Today was a rain day. I'm still working outside this week, so yes, I had extra time for a video. Maybe perhaps I will actually start putting in some news segments a little more appropriately, where I'll Google and or research and pull up some news articles as they talk about them. I don't know. Let me know in the comments if there's any adjustments to my content that I can do in 5 seconds or less. Because again, working a full-time job, I'm the poor pleb with good math who just found markets. Alright? I did computers, I tried to work for the man, then I went into business for myself and worked construction, because it was at least better being my own boss. I didn't have to take as many stupid questions from people, and it's amazing. Doing quadratic equations in my head, it's so hard to find someone that can just read a tape measure and do fractions. It makes me such a desired commodity in the field. It's been easy, but COVID really kicked the crap out of me financially, and getting back on my feet has not been easy. So, yeah, I'm glad I've finally taken an interest in finances more than my accounting. Which I do not have a CPA, no fiduciary responsibility, don't even try. Alright? Yeah, I think that's about it for content for the day. I probably rambled at you for a good half hour plus. At least it's not an over-hour video. You still know what's going on with the markets. There's no big changes. And, next time I do an update, I'll try and include what dates we're looking forward to. So I believe the big ones are the 12th, the 15th, and the 19th of September, which should be the Fed meeting, the FOMC minutes, and CPI or PPI? No. See, I got to look this stuff up so I can give you more accurate information. These are going to be some big pivot points, but we should also be looking at earnings. Man, I miss my Maverick at Wall Street. He just force fed me heat maps and all the earnings. I didn't have to go look that stuff up. I'm like, great, I'll learn the schedule eventually. He hasn't been around. I really hope he's okay. It kills me. I miss his content. And I guess that's karma because everyone's been complaining. Top Gun, we miss your content. Like, yeah, I had to get caught off of mine and then do some better content. So, yes, I'll include some more market information. And then, yeah, I'm going to try and bring back some more crypto content. And who knows? Maybe I'll even bring back the stick figure slides. I know some people were like, no, get rid of the stick figures. But they really made a point when I did my What is Pulse video and made fun of Peter Schiff. By the way, Peter, you've been calling some stuff right recently. At least you're being bear in the right direction. I'll give you that. Yep. I'm hoping, as much as he didn't like Richard, I think Richard made a few points, and he might actually listen to a couple things. So pay attention to him just a little bit on Twitter, just to see if he's learning yet. Anyway, thanks for tuning in, folks. Hope you enjoyed my rant and my thoughts as I play Egomaniac, because I am the boss of market charts now with my crystal ball. I don't know. Did that get me any likes and subscribes? I don't know. Do I care? Not really. I love having fun with you guys. All right. Hope you enjoyed this. Stay frosty. Oops.